Hey everybody, welcome back to Chipstock Investor.
Welcome.
Hope everybody's having a great weekend so far. We're going to talk about Marvell technology today, and we had a number of viewers say that we're missing out on Marvell or we were wrong about Marvell technology. And on our last update that we did about Marvell, which we're going to link right here and in the description below, we did say that we're going to be doing a reverse DCA, getting out of our Marvell position. That DCA means that we were not removing all of the Marvell from our portfolio all at one time, but rather selling our position over time. And we did that because we wanted to consolidate some positions in our portfolio. We just had too many stocks.
Yeah, and also don't cherry pick which data points that we present you to support whatever, I'm not sure what. The other part of our explanation in that video was we took the initial chunk that we sold from Marvell and dumped it into Broadcom at a stock split adjusted price of $130. Also, Casey bought some Dutch Bros stock. I think we're doing all right. Anyways, you can catch all of the action on what we're doing with our buys and sells. If that's something that's really, really important to you, I hope it's not. But if you want, that's all over on Semiconductor Insider. We have an awesome community over there, and that's where you can find all of our research and content.
This is where Marvell sits in the semiconductor industry. They're a fabulous chip designer, but they also have a large portfolio of IP or patents for chip design. That we'll come back to that here in just a moment when we're talking about their custom silicon design solutions for a certain hyperscaler.
And stay tuned. Later this month in December, we will be doing our 2025 Investing in Semiconductor Stocks video using this chart as an annual thing here at Chipstock Investor. Hope you're as excited about the explainer for this chart as we are. We're looking forward to it. Make sure you hit notifications so you don't miss it.
Here's the overview for the revenue for Marvell in Q3 fiscal year 2025. You can see revenue up 7% year over year, 19% quarter over quarter. Data center and accelerated compute trend is in max out growth mode. Pretty much everything, especially in the networking equipment part of the data center, is booming. You can think of companies also like Astera Labs, Credo Technology. They're all doing awesome because of data centers.
Yeah, Arista Networks, a couple of videos on them. Networking, folks, if you haven't heard of it yet, kind of a big deal in the AI data center.
For a number of quarters, Marvell has teased that they're working with a hyperscaler. We posited that maybe it was Amazon AWS, but we couldn't say that with a certainty until December 2nd when Marvell said that that is exactly who they're working for, Amazon AWS. They are working with Amazon for their ASICs or custom chip designs, application-specific integrated circuits. We've talked about this in the past, but we'll focus on that a little bit more in this episode.
So we affectionately refer to Marvell as Baby Broadcom. And the reason we do that is both companies do have quite a bit of overlap in those IP and patents that they use to help a company like an Amazon AWS design their own custom chips for workloads in the cloud. So for Marvell specifically, they developed some of these patents, they acquired others to help piece together a lot of the elements that you need for this custom silicon. A lot of it has to do with various types of networking technology and interconnect technology, not just the processor itself. And then, of course, the magic wand that a lot of investors like to wave around when they're talking about their favorite semiconductor stocks, chiplets, advanced packaging there in the bottom right. Yes, a lot of designers are using chiplet and advanced packaging technologies, Marvell included. But the main thing you need to know is there are two primary companies that are working in this. There's a lot of businesses that do ASICs, that do custom chip design, but the two primary ones for these hyperscalers, the really, really big data center and cloud operators, are Marvell and Broadcom.
This slide is from a number of years ago from Broadcom, but it's still very important because Broadcom is the leader in hyperscaler ASICs or application-specific integrated circuits, that custom silicon. They also have merchant silicon, but Broadcom is the leader in custom. Matt Murphy called out that Marvell really only has this one competitor when it comes to hyperscaler chip design. Broadcom helped design the Google TPU or Tensor Processing Unit. We're going to come back to this in just a moment. This is going to be important when discussing some of Marvell's financials.
Yeah, especially some of the finer points on GAAP net losses. But the big takeaway here is some of these hyperscalers have been a little nervous about telling everybody who they've been dating. And AWS, at the very least anyways, is finally willing to say, hey, we have a relationship with Marvell. So mystery solved.
Before we talk about the end markets that are driving Marvell technology, word from today's sponsor, public.com.
If you were looking for a place to stash some cash that can still get a pretty decent return, but avoids some of the wilder volatility of the stock market, check out the bond account from public.com.
With the Fed's lowering interest rate, that could also lower the interest rate in maybe your savings account. So locking in a over 6% interest rate with a bond account could be a good thing for your uninvested cash.
This can be especially important in the portion of your portfolio where you maybe perhaps expect to need that money within the next 5 years. So oftentimes, if that's just sitting in cash idly, your interest rate can be pretty pitiful, and pretty good chance that that interest rate will continue to fall as the Fed continues to cut its interest rate. But you can still lock it in at this particular moment, 6.7% annualized yield. Not bad.
You can lock in that interest rate with the link below, public.com/CSI. Check it out in the video description.
Casey, break down some of the revenue segments for Marvell for us, because it has actually been pretty messy for the last few years while we've been waiting for the data center segment to really take over and propel the company higher.
Yes, excluding data center, all of these other end markets have been pretty ugly, but you can see that they're starting to come out of the downturn, starting to have some sequential recovery. CEO Matt Murphy broke down each of these end markets and discussed the expected recovery. You can see carrier infrastructure came out in this quarter pretty well, 12% quarter over quarter, consumer up 9%, and auto and industrial up 9%. They're starting to finally see some recovery in these other markets. But ultimately, the story for Marvell stock is really about the data center. All the networking chips, which are those interconnects between all the GPUs especially, and now the AWS relationship on ASICs. Data center is now over 70% of total revenue for Marvell.
Yeah, which is pretty incredible, up 98% year over year. So if you strip out the other 1/4 of the business that is still down significantly year over year, Marvell really firing on all cylinders right at the moment. And why is that the case? Well, again, if you think back to the semiconductor industry flow, Marvell designs lots of chips that are used in enterprise computing and data centers, but it's these custom chips in particular that are really moving the needle right now. And it's all about total cost of ownership, according to Murphy on the earnings call. If you're a very, very large hyperscaler like AWS, if you remove the e-commerce part of Amazon and just look at AWS, that's a business that does well over $100 billion per year in revenue. They have so many computing workloads for themselves internally and for their external customers. And oftentimes, it just doesn't make sense to always use the best of the best accelerated chips from someone like NVIDIA. Sometimes you might just get better total cost of ownership by designing your own custom chip. And if you have that kind of scale, one of the rare businesses that does $100 billion per year in computing revenue, obviously you have the financial resources to say, hey, let's design a custom chip. Catch the video we did earlier this year on Amazon's custom semiconductor design in Annapurna Labs. We will link that video in the description below as well.
After earnings, Marvell stock ran up even more, and there are some risks for this run up. This is the first one we'll call out. It's the balance sheet. You can see that they have nearly $4 billion in debt on the balance sheet with only $868 million in cash.
We'll address the balance sheet here in just a moment. There's a reason why they have all that debt. But the other big risk here is the lack of GAAP profitability. In fact, GAAP net losses deepened in the last quarter in Q3. Why is that? The two things are related. The balance sheet and this deepening of the net losses are very much tied together. And before we show you why, let's tee it up with this. So here's a chart that shows Marvell's quarterly revenue in the gray, their free cash flow in blue, and then the net loss in orange. You can see almost a $1.2 billion differential in this most recent quarter between GAAP net losses and free cash flow, which is very positive, which is a good metric, and what we still think is the most important profit metric at this particular stage for Marvell. How are all these things interrelated? Here are the three primary line items affecting that difference in the GAAP net losses and the free cash flow profit. You notice in dark orange or red there on the far right, they had a one-time, mostly non-cash restructuring charge. That was the main reason for the difference this last quarter. In addition to that, lots of amortization of goodwill and intangible assets, and then of course stock-based compensation, which is always going to be there because this is a fabless chip designer. You have to pay those engineers. But you have to remember that Marvell made multiple large acquisitions in recent years to get itself into position for this data center boom. Two of those in 2021, Inphi and Innovium. It seems that they overpaid for some of those assets of Inphi and Innovium, networking IP businesses, and thus the one-time write-down that affects the GAAP net loss this last quarter. These acquisitions are also the reason Marvell has all that debt on the balance sheet. So those acquisitions that we've been covering for years now at Marvell still very much bogging down some of the financials for this company.
But here's the reason that the stock is most likely soaring. Marvell is finally expecting a swing back to GAAP net income after years of net losses. Here's the outlook for Q4 of fiscal year 2025. They expect on a GAAP basis, 16 cents per share. On a non-GAAP basis, 59 cents per share. And you can see we have the comparison for Q4 of fiscal year 2024 up significantly. In fact, a net loss in earnings per share in the previous year. This swing to net income brings a lot of investors that only use GAAP metrics to the market for Marvell stock, which creates a higher demand for Marvell stock, especially in the short term. Let's talk about that premium valuation. Forward price to free cash flow at 53x. We still feel like this valuation is at a premium, especially on this price to free cash flow basis. We still believe that this is the most important profit metric to use at Marvell at this time. A lot of data center upside is now very much priced in, so you can expect some volatility in the stock price.
However, that said, with the data center segment growing so fast, and then the other business segments, which are still just 1/4 of revenue overall, obviously data center is very much in charge here these days, but that other 1/4 business is still an important chunk. With those now back in sequential growth mode, we actually do see some surprise to the upside for Marvell in free cash flow in the coming years. So congrats to everybody that stuck this one out and that are still invested in Marvell. Yes, we are now at this point no longer invested in Marvell Technology Group. That's just simply an us issue with our portfolio personally and needing to consolidate the number of positions down into the most important businesses and most important drivers of our portfolio personally. But if you're still in it, that's fantastic. We never meant to dog on Marvell. If you got that impression, this is a great business, obviously a very important player in this AI data center market and in the semiconductor industry overall. It's now, by market cap, one of the largest semiconductor businesses out there. So it doesn't look like that trend is about to let up anytime soon. Marvell Technology Group, folks, pretty good calendar year 2024. Looks like they are coming out of the red.
Thanks everybody for watching this episode. Make sure you hit the subscribe button, the like button, share with your friends, and we'll see you all again very soon at Chipstock Investor.